Joining us more with insights about the rush for a spot Bitcoin ETF in the US is Ether Capital CEO Brian Mosoff. Welcome, Brian.
Thanks for having me here today.
Thanks for being here. All right. We are continuing this conversation about ETFs. You say you helped launch the world's first Bitcoin ETF alongside Purpose Investments 2 years ago in Canada and acted as an advisor to the Ontario Securities Commission. Talk to me about your initial thoughts on spot Bitcoin ETF filings in the US.
Well, I mean, everyone's wanted this for, I think, a very long time. The first filings go back about a decade ago when Cameron and Tyler of Gemini put forward their trust. And so it's not just a recent thing. We've seen many applications come before the SEC. And so this is good for retail investors. This is good for institutional investors. So far, the access points in the space have largely just been people who are technologists, internet savvy, willing to sign up on regulated or unregulated exchanges, whether they're based in the US or in another jurisdiction. And so bringing a clean access point to the US market for institutions and retail investors is a great thing. It's safer, it abstracts away things like custody. And so this is good. The question is just, when is it going to happen? And I think it is going to happen. It's just a question of when. Are we a few months away? Or are we another year? That's kind of anyone's guess.
What makes you say it is going to happen, given all the applications that have come before the SEC and been rejected?
I mean, the funny answer would just be, it has to. It has to, because it's clear that this asset class isn't going away. Whether we're in a bull market or a bear market, there's still interest in the space. The pendulum swings, in terms of price and market sentiment, but the assets aren't going away. Bitcoin didn't die in that kind of 2018 to 2019 era. There was renewed interest in the 2020 and 2021 cycle. And now we're seeing again, as regional banks start to fail, there's questions around what's happening in geopolitical events. People want access to this asset. And the question is, what is it going to be? Another advantage of greenlighting something like an ETF is this is good for people to report taxes, to know that it's being held, inside of their jurisdiction, not on some foreign platform. This is good for a lot of reasons that government should lean into. You can ensure that people are getting exposure to an asset class that they want, but in a regulated way, in a safe way, in something that has reporting obligations, that has the right type of surveillance to make sure that the way that the underlying asset is being transacted isn't being used in illicit activity or from some unknown source. When these ETFs purchase the underlying product, it's going to come from OTC desks, it's going to come from exchanges that follow certain rules, that have the right types of registrations. That's a great thing versus people going into a self-hosted wallet and on-chain trying to figure out how they're going to buy it, or again, going to an unregulated platform. So there's all the reasons to lean into this if you're government or a policymaker. The question just is going to be, when is it going to happen? So I don't know exactly when, but I think it's time, and everyone wants this. And I think including the SEC, it's just about hammering out the last bit of details.
Our last guest said there is a big difference between the market in the US, Canada, and other jurisdictions when it comes to ETFs. Can you speak towards the adoption and reception of the ETF in Canada?
When we launched with Purpose, the spot Bitcoin ETF, it was one of the biggest ETF launches in history. It had over $1 billion within its first month. That's Canadian dollars, so about 700 US. Currently, between the Bitcoin and Ether ETFs, there's well over $1.5 billion, and there's other asset managers as well that have these products in market. So there are people looking to buy these exposure points. There will continue to be, and as he was saying, there's a much larger market in the US that is ripe for disruption, that's ripe for gaining exposure. And so I think this is a good thing. Canada is a fairly conservative market, so we haven't seen over the last year a lot of new money flow into the space. There's a lot of hesitation in a post-FTX world, but we're starting to see slowly the interest come back. We're starting to see institutional investors and advisors reach out and ask questions about what the next catalyst is going to be for the industry, how things are shaping up around Ethereum and proof of stake and the opportunity to stake. And then the next question will be, could you even build a staked Ethereum ETF? And that's, I guess, a topic for a different day. But we're excited to in Canada, I think we're leading the way here. The Ontario Securities Commission has been working collaboratively with industry to figure out how the platform should be registered, what would be appropriate to bring new ETF structures to market for different types of unique products. So the industry is maturing. These access points are coming to market, and I'm excited to be a part of that.
Given your experience with the Ontario Securities Exchange and what you're saying about the landscape in Canada, what's your take on exchanges like Binance and others opting to leave Canada because regulation is too tight? They're saying that they're not able to work with it.
Binance has done very well at bringing whatever the newest thing in crypto was to market first. Whether that was potentially a security or whatever the asset looked like, they wanted to make sure that they were giving their customers that exposure. And that's great for the customer, but it leaves a lot of gaps in terms of what the appropriateness is of those types of listings or products that they're offering out to their customers. And so if you're in a market that says, okay, we have some rules set up, we have certain expectations that we're going to put on you and what you can offer customers, but some of the activities you're going to have to pause, you're going to have to not offer to retail investors, that doesn't quite fit into Binance's model. And I respect that. I understand why they would pull out and say, we're just not ready at this point to take on the level of registrations and reporting obligations. It doesn't mean, I think, that forever they'll never exist in the Canadian market. But for now, for their business, it doesn't make sense for them to be there. That's a great opportunity for the Canadian exchanges. You're seeing big US platforms like Coinbase do a pre-registration undertaking. It's what it's called currently in Canada. You're seeing them say, we're willing to play by the rules. We're going to do the registrations and we're going to work with the regulators to make sure that we're compliant in this jurisdiction. So that's an opportunity for these platforms that are in the US to lean into a jurisdiction that has started to create a path towards registration and to be compliant, and to say it's an important market. And to your points earlier, it's not the size of the US, but it's still, in terms of regulation, very similar to the US. The expectations are very similar. And so to go into that market and serve a customer base that looks very similar to an American one, that's a great thing. And they'll continue to expand their footprint into that area.
You just brought up Coinbase there. Coinbase is listed as the surveillance sharing partner in many of the spot Bitcoin ETFs here in the US. We've been talking so much about surveillance sharing, but we've not really gotten into what this actually means. Can you take some time to unpack that for us?
I actually don't think that I'm the appropriate person to answer exactly what that means. I have just a very high level understanding of it. So I'll save that for another guest.
All right. That is fair then. Okay, let's just leave it there. Thanks for joining the show.
Thanks for having me.
That was Ether Capital CEO Brian Mosoff.